Hello and welcome to Let's Talk Business. I'm Priyanshi Sharma, and in this segment we get you an update on the top business, finance and economy related stories of the day. While markets advanced for the fourth consecutive session to close at a 6-month high today. Metals, realty and fast moving consumer goods sectors advanced. My colleague Hiral Daria joins us for more from the BQ Prime newsroom. And Hiral, take us through the highlights of the market action today.
An absolutely interesting day of trade is what we witnessed with the kind of gains that did come in, and this is ahead of expiry as well as ahead of the RBI monetary policy that is slated tomorrow. Clearly, fourth consecutive session of gains is what we've seen, and you have the markets which have actually ended at a 6-month high. In fact, Nifty has managed to surpass those 18,700 levels first time in the last 6 months, I think since December 2022. And you had the Sensex which gained nearly 350 points in today's session. You had a lot of, record highs that were hit in terms of the Nifty Mid Cap 100, Nifty Realty, Nifty FMCG, Nifty Small Cap 100 as well as Nifty Auto. All of these indices trading at life high levels. You had Realty Metals as well as the PSU banks that see some good moves. However, you had the Bank Nifty which clearly underperformed the benchmark indices in trade. What analysts are saying from here on is that for the next leg of the rally in terms of the markets, participation of the bank index is also going to be extremely crucial. So that's something we need to wait and watch. The IT space, the kind of selling that we saw in yesterday's session, that abated. But clearly, the market breadth was absolutely in favor of the bulls. If you see the top gainers, Britannia as well as Nestle, both these counters were trading at a 52-week high in today's session, and this was mainly picking up news that the palm oil imports have hit a 27-month low. Moving on, you had Tata Consumers, BPCL as well as HDFC Life that were top gainers. Cipla, Kotak Mahindra Bank, M&M, Bajaj Finance and Maruti were the top losers. However, you have Maruti which actually went ahead and launched the all-new Maruti Jimny at around 12.74 lakhs. So that's going to be some competition coming in for Athar as well. A lot of stocks were at a 52-week high in today's sessions. Apollo Tyres, Bajaj Auto, Indigo, HPCL, HAL, DLF as well as Aurobindo. These were a few of the names that were trading at a 52-week high as well. Moving on, let's quickly look at what were the newsmakers looking like in today's session. Axis Bank, the bank's market capitalization crossed the 3 lakh crore mark, and now it's the 5th largest bank as well. Suzlon jumped in trade and they have extended a 3-day rally to almost around 25%. RFP Industries, you have Society General which has gone ahead and picked up stake, on the back of which we did see some bit of an up move coming in on that counter. Insecticides India was in focus as well, as the government has granted patent for substituted pyrazole derivatives, and that's the reason why we did see up move on insecticides. Infosys, now the return on equity is at a 10-year high despite lower margins, and that's the note that Jefferies has put out, and Infosys was in focus in today's session. Torrent Power was also an interesting one on the back of an up move that we saw, and they've signed a MOU with the government of Maharashtra for a 27,000 crore project which will be executed over the next 5 years. Moving on, Engineers India was another one. The stock hit a 52-week high on the orders that they've received from JSPL as well as Nalco. And you had All Cargo Logistics, where one of their arm is to sell the Jhajjar Logistics Park and 10% in other parks as well. That's the news that we've been picking up so far. So a lot of newsmakers in trade today, but the day is going to be crucial tomorrow as well. We have the MPC, and whether the bank index is ready to take the Nifty to further higher levels is going to be interesting to wait and watch. Thank you.
Thanks, Hiral, for that update. And moving on, monsoon is a downside risk for reviving consumption, according to Sanjeev Prasad, the MD and co-head of Kotak Institutional Equities. Now, he was speaking to BQ Prime Sanjeev Maghat, and in that, Sanjeev Prasad said that the financial sector can offer some welcome surprises in financial year 2024. Listen in to his forecast.
Put together, we are hopeful that rural recovery should happen. The only worry over is what happens to monsoons. Having said that, the monsoons will only impact certain parts of the country and in some segments. But yeah, if you have a really bad monsoon, then obviously some of this recovery could be delayed for some time.
You spoke about the apprehension on the volume growth. What could be the triggers to push it back or get the volumes back, and what could be the challenges for that?
I think it's still simply income recovery and job recovery, But I think it's more or less happened. If you look at urban India, most of the people who had lost their job in COVID or had incomes cut significantly, and most were there in the, what I call the physical services sectors. Most of the jobs have come back actually. So I don't see too much of a problem in urban India at least. In fact, doing quite well. Rural India, obviously things will recover with a lag. If you look at one data point which we track very closely, and that is number of people or households who are looking for jobs under the government NREGA program. That number obviously went up very significantly, that is, during the pandemic time. But it's actually come off. It's more or less in line with the pre-COVID levels, which means people have gone back to the pre-COVID jobs. And keep in mind the fact that a normal job would be much higher pay compared to a NREGA job, and that's also part of the time, part of the year, that is NREGA employment. So I'm quite hopeful that, given the combination of job recovery, income recovery in rural India, you will start seeing, consumption starting to pick up. So 24 earning that way should be okay. You could possibly see some disappointments about the consumption sectors if, the volume recovery, which I was talking about, gets delayed by a couple of quarters because of bad monsoons or whatever other issues. And as I was talking about earlier, we anyway have built fairly conservative minimum assumptions for the banking sector. There could possibly be some surprise, a positive surprise that is over there. So maybe some downside risk to outsourcing names and the consumption names, but possible upside risk to banks.
And along with this, Robert Sierra of Fitch Ratings has also raised a red flag for the Indian economy. While speaking to BQ Prime, he said that the impact of the RBI's rate hikes is yet to be seen and that global headwinds are still a mounting concern for India. Here is a short excerpt from that conversation.
We are coming into our forecasting round in the next couple of weeks at Fitch, and it's possible that growth could be upgraded somewhat because of this stronger number that we've just had for the first 3 months of the year. That's the near term. Obviously, the Indian economy is facing some challenges over the next year, as many other economies are.
Right. You said the forecast could be upped somewhat. You seem to be a little cautious.
Yeah. I mean, the growth that we published in March in our global economic outlook was 6% for this fiscal year. I could see this room there for perhaps a modest improvement in the GDP forecast, but as you say, there are plenty of challenges ahead, not least the global geopolitical environment, the sort of tightening in monetary policy. You have to bear in mind that although in India's case we've had 250 basis points of monetary tightening and similar sort of large increases in large tightening elsewhere, most of that tightening still hasn't fed through the whole economic system, so that the worst is still to come in terms of the impact of monetary policy on the economy.
And moving on, former TCS CEO Rajesh Gopinathans' salary grew by a modest 13% in this financial year as the Chief Executive Officer of TCS. Now, that was still 427 times the median pay of employees at one of India's largest IT services firm, TCS. Tushar joins us for more on this. And Tushar, it's appraisal season, but the race seems to be muted for the former TCS CEO. So tell us about his salary and how does it compare with the salaries of his peers?
The CEO of India's largest IT firm earns a fourth of what the leader of the third largest does in a year. Rajesh Gopinathans saw a modest increase in his salary in his final year as CEO. That was still 427 times the salary an average TCS employee earns. According to TCS's annual report, Gopinathan drew a total compensation of nearly rupees 30 crore. Compared to this, a TCS employee earns an average of rupees 6.82 lakh in FY23. But he earned the lowest among his peers. Infosys CEO earned 56.5 crores in FY23. Wipro CEO Thierry Delaporte earned about rupees 80 crore. At 123 crore, HCL Tech's C. Vijay Kumar was the highest paid IT CEO last year. CP Gunani of Tech Mahindra, who retires later this year, made rupees 70 crore. TCS didn't quantify how much new CEO Kritik Vasan would earn, except that his basic monthly salary is fixed at rupees 10 to 16 lakh. He'll also get a sizable commission that runs into crores, but that's linked to the profitability of the firm.
And the Reserve Bank of India's Monetary Policy Committee meet is underway. And even as the RBI paused rate hikes in the month of April, Indian banks are cutting their lending and depositing rates. Banks are being forced to reduce their margins and in an effort to remain competitive with persisting decline in lending demand and market pressure. My colleague Jaspreet Kalra joins us for more details on this. Over to you, Jaspreet.
Right, thanks for that. Yes, banks have been compressing their margins on loans to stay competitive, even though benchmark interest rates have stayed flat. Now, effective interest rates on fresh bank loans made in April fell after rising for nearly a year. Similarly, interest rate payouts on fresh deposits also moved lower, even as rates on already outstanding deposits and loans have climbed higher. Now, what exactly is causing this divergence between fresh rates and rates on outstanding loans and deposits? A few factors are at play here. Up first, liquidity conditions have improved significantly in the banking system, credit demand has softened, and competitive pressures have stayed buoyant. Now, this comes at a time when the RBI has also stepped up its efforts to reduce excess liquidity in the system. While interest rates on fresh loans and deposits have softened for now, all eyes will be on the outcome of the MPC meeting tomorrow, and banks will be listening closely to the RBI's language surrounding liquidity in the system. Although excessive liquidity can hamper the effective transmission of monetary policy decisions, bankers BQ Prime spoke with said that they don't expect existing conditions to pose significant troubles for the RBI's objectives.
And the RBI's Monetary Policy Committee meeting is underway and the outcome will be announced tomorrow. As per the street consensus, the RBI will keep the repo rate unchanged amid cooling inflation in the country. Pallavi Nahata joins us with the details of what you can expect from the central bank's key meeting.
India's Monetary Policy Committee is set to announce its decision on Thursday. The MPC is likely to remain on pause on the key lending rate amidst easing inflation and resilient growth. All 18 economists polled by Bloomberg expect the MPC to maintain status quo on the RBI's repo rate on Thursday. The benchmark policy repo rate is currently at 6.5%. Amidst a gradual decline in inflation and some moderation in growth arising from external headwinds, Rahul Bajoria, Chief India Economist at Barclays, expects the RBI to stay on hold through FY24. Indranil Pan, Chief India Economist at Yes Bank, expects the MPC to remain on a prolonged pause and then cut rates in February next year. Now let's have a look at some of the factors that are likely to influence the MPC's decision. In April, that's the last inflation print that the MPC has, retail inflation fell to an 18-month low of 4.7%. It fell within the RBI's target range for the second straight month, raising the bar for further rate hikes. Trends for May suggest that inflation can ease further still, closer to 4%, helped by base effects. 4% is the MPC's target, plus or minus 2%. Inflation estimates for the ongoing quarter can be downgraded in the upcoming policy. On the other hand, growth remains strong, with the Indian economy having grown by 6.1% in Q4 FY23. The domestic banking system's liquidity is expected to remain flush with the RBI's decision to withdraw 2,000 rupee notes, the recent variable rate repo auction, and a flat balance of payments this year. This is according to Goldman Sachs. Since the last policy, yields on the benchmark 10-year G-Sec have fallen and are currently trading closer to the 7% mark. Oil prices are trending lower, while the Indian rupee has depreciated since the last policy because of a strong dollar. A delay in the onset of the southwest monsoons will have an impact on domestic food prices and possibly rural demand, but that remains to be seen.